Good morning, good afternoon, and good evening to those of you around the world. Welcome to the daily Trade the Chain crypto update, where we give you everything you need to know for the next 24 hours and hopefully the next few days. Today is January 23rd. It is a Monday, and we are starting off the week. It seems to be on the right foot for both crypto and equities. We have the DXY charts in front of us, and it does look like we are still ranging, like we mentioned last week. From a daily perspective, we met that low from last Wednesday and could not break above any of the candle bodies or wicks from last week. So technically still on the downtrend. I will say it is above the previous daily close, which is, kind of an important metric for building a little bit of strength. But, we are still on this downturn, if you want to call it that. We could also do wick to wick, which would show, it's definitely still a little weak, but it's still something to watch out for because, more or less equal lows here. You call that, I guess, a higher low technically, but it's still very rough sledding for DXY. I would say that it's more inclined to go down, but at the very least, it's likely to range. And until it can break out of this little area right here, I have a feeling crypto and equities are going to flourish. So flat DXY with a lot of bullish momentum, probably going to continue that bullish momentum until we have a break in the trend or maybe a tap up to 103 or 103.5. So those are your targets for bears. Else, if we continue to trickle down or range around the 102 area, we'll probably still continue in the bullish direction. So looking at equities, drew this for the Trade the Chain community. If you're not in the community, I did indicate I am still cautiously optimistic and said bullishness was likely, although trades would not be easy due to the volatile nature of what we have coming up this week. And if you read the Trade the Chain newsletter, it went out about 30 minutes, an hour ago. It covers all of this information in depth. So if you're not signed up, you can get signed up on the Trade the Chain website or automatically get on the mailer if you sign up for a membership. But the big things coming up this week are PMI tomorrow morning, which is related to producer inflation. So we have manufacturing and services both are supposed to rise a little bit, not very positive, but as long as we come in under forecast, the market should interpret it positively. We also have GDP coming in Thursday. It's supposed to come down about 0.4%. So lower than that is bad. Above that is good. And then we have PCE expected to come in. Core PCE, very much the important metric, which is minus energy and food costs, the important ones, but I'll digress on that outlook. Core PC is expected to rise by 0.1%. So anything at this or lower would definitely be good. Seeing PCE kind of, flatten, not exactly what we want. We definitely want to see this continuing lower, but, the year over year should continue lower as predicted, which is really, what we want at the end of the day. So, and then we have the Fed meeting next week, which will be on February 1st. You can see federal funds rate at 2 p.m. on February 1st. So we'll talk about each of these as the day continues on. I think PMI will probably be the least impactful as we typically look at, mainly consumer inflation. GDP is very important, of course, the Fed. But given the fact that we have earnings this week, as well as all this data, I'm expecting things to be a bit wonky. So PMI should play into the morning session a lot more so than you would typically expect. So something to look out for there. All of these numbers are in the Trade the Chain newsletter. And of course, you can look back at the video if you need screenshots or more information. So back to equities, we're obviously headed higher. I think 40.40 is a reasonable target considering we are well above the 40.15 level and we kind of had a retap back. You can see this very long hourly wick right here. So we tested 40.50. We broke above 40.15. We retested 40.15. We're now well above 40.15. And I think 40.40 would be the next reasonable target. If you get above 4040, then you have, then that's kind of your next trampoline area to then move higher towards 4100. But we'll of course take it level by level, as I would expect, just given the volatility from equities, that if we tagged 4040, maybe we're back down to 4015 quickly before we move up to 4100. But I would expect some resistance at 4040, considering how oversold we are. But it is also important to note that last time we broke above a level, ranged above it, then we had a breakdown before moving higher. So if you're thinking about previous, trade patterns, then maybe we get up to 4040. We have some volatility around here. Then maybe FOMC sends us a little bit lower, and then we end up creeping higher. So there's, potential trajectory based on news. But of course, again, best to play it level by level. Equities look short-term bullish, but I would expect it to come off the highs a little bit around that 4040 level. So with that in mind, moving over to Bitcoin, very much similar outlook compared to Bitcoin as well as equities, or compared to Bitcoin from equities. Get above the 2375, 23K flat level. You can use that as now a trampoline to get up to 24K. And I would expect, definitely a little bit of a pause at 24K. Maybe we break above it, tag 24.4, and then start ranging around there, kind of like we did getting above 22.5. So very important to consider that we are still going to play this level by level, even though, we do have bullish momentum. Again, we have all of that data in front of us this week. Plus we have earnings. I believe we have Tesla tomorrow or Wednesday. We have IBM, we have Visa, we have MasterCard. And of course, all of this is going to trickle in, continue to next week. And in February, we have Apple earnings, I think, right after the FOMC interest rate hike. So of course, all of that will play into price action. So if you can confirm above 23K, that you can get above 23.3, which has really been peak resistance, as we saw at 20 on Saturday. Get above 23.3, then you're up to 24, where I would expect some resistance or another pause. Volume doesn't look too bad from an hourly perspective. It has been decreasing since the markets opened this morning. Not entirely unusual for a lunch session, which we're talking to during lunchtime of Eastern hours. So we still have 40 minutes left, and the candle body is about more than halfway of the previous candle body. So in terms of volume, I should say. So definitely looking a bit positive for momentum, but again, very similar to what we saw with equities. We saw it bust higher, and then we saw this wick. I'll try and zoom in as much as I can for you guys. Then we saw this wick that came right back down to the support level, just above support actually. So, we may see the same thing for Bitcoin. Maybe we get 23.3, maybe we retap 23, and then we head higher. Typically, it's better to play that retest, although I will say, we have had a few events where playing resistance higher, certainly was much better than waiting for that retest. But, it's really up to your risk tolerance. If we confirm above 23, a lot of room up to 24 and such, but do you really want to long at resistance? With equities, I guess, equities are continuing to move higher. So wouldn't, in my perspective, when you're thinking about it, typically rarely want to long resistance. But in this scenario, if you start creeping above 23.3, then, 23, that retap becomes a little bit more moot. So, but it is important to consider it did happen on equities, which means that, it's probably the safer bet on Bitcoin. But if you wanted to make a play and then compound, and keep your stops tight, there's another play as well. But it does seem more likely than not, if, we can hold above 23 in the hourly, that we're going to tag 24. Looking at Ethereum, which has been a little bit more suppressed than Bitcoin. And if we actually look at ETH BTC, I'll kind of zoom out a little bit. You can see that, ETH compared to Bitcoin, the Ethereum versus Bitcoin chart has been getting crushed. I probably should have pointed this out as a very good short opportunity way back, but, both have been more or less going up, although Bitcoin has clearly been the better trade. So moving back to Ethereum, just kind of giving rhyme to why it seems a little bit weaker than Bitcoin, when we're taking into account all of these moves. So, there's no real narrative reason for it. It's just, the way of the water. And, clearly Bitcoin chart does continue to look suppressed, but eventually, I'm not expecting ETH versus Bitcoin to fall forever. and it is kind of sitting in this larger range where you might expect, maybe a pop to occur. It could definitely continue to tank down to, 0.68, but, you would probably start expecting some sort of recovery soon. But, still better to play Bitcoin, I think, in the near term until we see some sort of confirmed support hold for ETH versus Bitcoin. So knowing what we do about that, let's take a look back at the Ethereum chart, because it's still probably going to move more or less in line with Bitcoin, just not to the same degree of volatility. So looking at the hourly, I'm actually going to zoom out a little bit for you guys, get a bit better of a larger perspective so we can see what may happen if it breaks out. So we held above previous daily close around 620. I think actually when I alerted the Trade the Chain community, we were right around 620. We moved higher above 625 previous daily close. We are now in the top half of the range. So if you can confirm 1625 as support, then you can break higher above 1650. If you can flip 1650, then you have room to fly up to 1700, 1750, maybe as high as 1760. I would probably call 1750 a good target. It does seem like Ethereum is really loving its round numbers, but definitely as high as 1760 for this next move. If it comes to fruition, I would expect that to act as some sort of resistance, and then maybe we creep down to 1700 and then form that level as resistance. And of course, if you cannot break above it, then you're likely due to continue to range in this level. And of course, if 1600 breaks, then you have this 1 hour 200 moving average, estimated moving average, I should say, to act as kind of your final active supports, and then you will move lower to 1530. So I'm not very bearish right now until we see equities really start to come off their highs. If we get a pretty nasty wick back down to 4K or 3990, or not wick, candle body, I should say, then maybe a little bit of reason to get worrisome, because maybe we just have a multi-day sell-off like this and we catch at support again. We are reaching that resistance level of 4040, and Bitcoin and Ethereum are trying to kind of break out of resistance. So, little bits of, mixed signals from equities and crypto. But again, if equities don't really sell off and just continue gradually moving higher, I would expect very similar out of Bitcoin and Ethereum up to their next resistance levels, which are 24K for Bitcoin and about 60 or 1750 for ETH. And support for Bitcoin is 22.5 and support for Ethereum is 1600. So cautiously optimistic as we continue throughout the week, but it is important to note, and this is in the Trade the Chain newsletter, we have earnings this week. We have PMI tomorrow. We have PCE and GDP later on this week, and we have FOMC next week. So there's probably not going to be too many easy trades, and I would recommend you take your money off the table unless you get a really good signal from the market in a bullish or bearish direction. Take that money off the table quick and often. It is better to have profits than round trip them. Even if you do miss out on a few percentage points of the move, that is just my advice for everybody throughout these next few weeks. Is, I have a feeling it's going to be a little bit more difficult than what we saw last week, and therefore you should be closing early and closing often, and not take the risk of round tripping your assets and potentially moving into negative territory. Another good way to look at it is, if you are winning a trade, take 50% off the trade and then set your stops flat. That way you will always have that 50% margin, that 50% gain. And then if it round trips back to your entry, you lose nothing, because you are closing the trade at break-even value with 50% of gains already locked in. So once you do that, you walk away and you say the trade can bust. I still walk away with 50% of my earnings. Or if things go well, then the other 50% continues to accrue value for a close at a later date. So, really good way to approach things in this perspective. Take a good portion of the trade off the table, set your stops at your entry, and walk away and enjoy the rest of your time until you have the next trade that is presented to you. Typically, traders who enact this methodology will end up, securing profits more often than not, because their risk is nothing after they've already experienced a gain in value. So, something to consider. And of course, always monitor your stops. Don't treat them like it is that it is the Bible or the book of God or anything like that. Stops can mess up, decentralized trading platforms especially, and during low liquidity, high volatility times, you can certainly get a stop skip. So always actively monitor your positions as well, especially if they're large, and make sure you understand the risk in front of you. But for right now in crypto, the best decision is to trade with less risk, take money off the table early, and understand what news-driven events are in front of you, so that you can both time your trades and not get caught with your pants down. So good luck, happy trading. See everybody tomorrow. And if you're not in the Trade the Chain community, you can get signed up for a 14-day free trial at www.tradethechain.com.